What does an underwriter do? The underwriter plays a critical role in the mortgage loan process. After the loan officer and processor have compiled the full application package, the underwriter conducts an in-depth analysis of both the borrower's details as well as the property itself. They review the documents like bank statements, pay stubs, tax returns, appraisals, and title reports, looking for issues that may impact loan eligibility or repayment capacity. The core duty of underwriters is to evaluate a loan against the 5 C's: credit, capacity, capital, collateral, conditions, and character. Capacity review confirms the borrower's stable income and ability to repay the debt. By scrutinizing these credit attributes, the underwriter clarifies the risk levels associated with the loan approval. The underwriter must determine the eligibility based on the lender's guidelines for debt-to-income ratios, credit history, income sources, and liquid cash reserves. Regulatory compliance is also a major responsibility. They ensure adherence to federal, state, and agency laws governing lending and real estate transactions. This includes statutes like the ECOA, Fair Housing Act, and Truth in Lending. Compliance helps mitigate legal risks for both the borrower and the lender. The underwriter is the last line of defense in confirming all federal disclosures were delivered and that proper policies were followed in the origination process. Any oversight can jeopardize the loan or lead to fines and fees. Underwriters act as the last line of defense before a loan decision. After completing their comprehensive risk and compliance analysis, the underwriter makes the final determination on a loan's decision. They can approve, issue a conditional approval, or deny the loan if risks exceed the tolerable levels. Clear communication of the decision and related contingencies is provided to both the loan officer and borrower. This authority over credit access carries major responsibility. Underwriters strive for impartial ethical standards grounded in prudent loan structuring. Once all loan conditions are satisfied, the underwriter determines whether to final approve a loan application. If granting a final loan approval, provide their final endorsement by signing what's called 1008 or underwriting transmittal summary. This 1008 form summarizes their findings, analysis, and final recommendation, which is submitted to both lenders and investors as the official record of their approval. By signing this document, underwriters carry immense accountability and liability for their decisions. Their endorsement confirms adherence across all regulatory documentation and structuring guidelines. Others are exposed more directly than some other roles in the process, since any invalid or fraudulent approvals can jeopardize their livelihood through GSE blacklisting. This necessitates diligent ethical practices governing underwriter analysis and approval recommendations. Mortgage underwriters maintain a vital, often unseen role. With accountability for upholding regulatory compliance and fiduciary duty, underwriters validate transactions from paperwork to principles. Their discerning eye for detail mitigates latent risks that could undermine loans or institutions.